In today's video, I want to take a look at the dollar, and I want to lay out a possibility um, that almost no one seems to be considering. And yeah, a month ago I wasn't considering it, but now I'm starting to wonder. So first off, I think this is probably due to multiple bouts of QE by many central bankers and market interventions. We're just getting a lot of things happening that have never happened before, and we're getting a lot of these kind of trends where cycles and sentiment just don't work. The trend just explodes, and there are no counter trend moves, or if there are, they're very shallow, very brief. Normally you would just never see a move like this, like what we had in the dollar. Now let me switch over to the euro and the yen. So here's the mirror side, which was the euro, and we see that same thing happening. Just an incredibly powerful trend with almost no counter trend moves that just drops into the abyss over several months. Nothing like what we should see in the markets. There should be counter trend moves, and very similar in the Japanese yen. Just a complete collapse with no counter trend moves. So here is the weekly chart of the euro, and you can see that the 200-week moving average, which was kind of the last resistance zone, hasn't stopped price at all. It just sliced right through it. Very unusual. And I pointed this out in one of my other videos also. This intermediate cycle here was a right translated cycle, and right translated cycles should not drop below the previous cycle low. This intermediate cycle, even though it was extremely stretched, should have bottomed right here, well above this 2016 yearly cycle low. But that has not stopped the price. We're starting to just accelerate even faster to the downside. If this support zone here at the 2016 low gets broken, and it looks like the odds are very high that it's going to be tested probably during this daily cycle, if this gets broken, then there is risk that we see a move to the downside that mirrors this move to the upside, where there was just no counter trend moves. The price just went basically straight up, and as of right now, it's starting to look like price is preparing to just go straight back down. Like I said, a mirror move of what happened here, but on the downside. And here's another big warning sign. I put the Fibonacci's on here from the previous 3-year cycle low, assuming this is a 3-year cycle, which I'm kind of doubtful. I think maybe this was an early 3-year cycle, and we've now this is a new 3-year cycle that is now topping in the left translated pattern, which would mean that we're starting in a new bear market. But anyway, I put the Fibonacci's on here. We've got the 23.6% Fibonacci didn't even slow price down at all, not even a bounce. That's one warning sign, and this is a major one. The 38% retracement also did not stop price at all. We should have had probably an intermediate cycle bottom off of this major fib, or at the very least a daily cycle low. We were definitely late enough in the daily cycle for this to have triggered at least a bounce out of a daily cycle low, and this major Fibonacci retracement right here didn't stop price at all. It sliced right through it. So there is something seriously wrong with the dollar, and I'm going to suggest that it's a 6-7 years of QE is finally coming home to roost. So and this is driving everything higher. If you look at I'll put some other charts up here, but you can see here as this thing starts to collapse, and we topped back here in December, but you'll see here when I pull up these other charts, as the dollar really starts to collapse, it's starting to push everything higher. Stocks, gold, oil, everything. So keep in mind, this is the S&P, that the dollar topped right here in December, and look at the S&P. Since as the dollar collapses to the downside, the S&P has started to accelerate to the upside. Same thing with the NASDAQ, even more, although it's even more dramatic. Dollar tops right in here in December, and the NASDAQ has just gone on a massive move to the upside, pushed by the collapsing dollar. And as I've noted, most of the inflation is focusing on the stock market, which is logical. The stock market is, I think, is entering a final bubble phase, so most of the liquidity is going to flow into that sector where it's easiest to make money, where there's a very well-defined trending move happening. But we're also starting to get some of this liquidity from the collapsing dollar leaking into the commodity markets a little bit, and I think that's what's going to happen over the next year. Is commodities will also follow the stock market up, but most of the gains, the easy money, is going to be in the stock market until the bubble pops. Once the bubble pops, then I think the moves in the commodity markets will become much more aggressive to the upside. But you can see here as as that rally in the dollar failed, and then we really started to accelerate to the downside, slicing through every support zone. Oil has bottomed, and it too is also developing a very strong move to the upside, and as of this morning is back above the 200-day moving average. And the same thing with gold. As the dollar has collapsed, gold has found what I think is probably an intermediate bottom, and has started a very aggressive move higher. And now let me point out, at this top, I kept warning people that gold had to do two things. It had to complete a failed daily cycle, and it had to complete at least an ABC correction before we could get an intermediate cycle low. At this top, of course, the perma bulls, nobody believed me. Everybody was convinced that gold was going to the moon. But gold did exactly what I said it had to do. We've got an A, B, C correction, and we've got at least one failed daily cycle here. This daily cycle moved below here. So we've got all the requirements that we have to complete an intermediate cycle low. We don't have to go any further. This does complete both requirements, so this can qualify as an intermediate cycle low. I see a lot of people assuming, and like I said, a month ago I was assuming the same thing, that the dollar has to bounce simply because there has to be an intermediate cycle low. But we don't live in the same world. Even as a year ago, markets don't behave the same way they did before. This is not your father's market anymore. These are managed markets. Trends, as I've shown you, trends can just go on for months and months without really any counter trend moves. Cycle forces and sentiment don't work very well in some of these markets, and some of them they just don't work at all. I've given up on the currency markets. One of the reasons I just would never trade the currency markets is that cycles and sentiment just don't work in those markets. They're controlled by central banks. And so I think it may be an error to assume that the dollar is going to bounce. it may not bounce. The euro should have bounced when it collapsed back in 2014, but it didn't. So I'm going to caution people that the dollar just may not do what everyone is expecting it to do. It may not bounce here, and we may go down in the same fashion that we went up.